traders, welcome to the TMT stock market strategy video for Thursday, March the 3rd. Well, we got a lot of chop yesterday. If you're trading intraday, you would know what I'm talking about. A lot of chop, intraday chop. Basically, we're in a range all day, and that usually does happen when you have a large move the previous day. So we had an inside day from Tuesday's big move, but nonetheless, guys, I mean, really, really terrible trading. As far as the intraday moves, lots and lots of gyrations from the lows back up to the tops, and then at the end of the day, obviously they kind of pop them higher so they can they short cover occurred always usually at the end of the day. So where are we now, and what are we looking for? Well, we're getting to a point where we're overextended again, and that does not mean that we want to go out and just sell the market, but it does mean that you have to use caution. We've been up pretty much, I think 5-6 days straight up, and then we consolidated for a few days, and now we're on another move up again. And that's healthy when you consolidate, but we're approaching some big key levels, which I'm going to show you. But I want to show you a couple of indicators to let you know what we're looking at. Stocks above the 50-day moving average in the S&P. You could see here that we're about 75%, and when we get to these areas, we start approaching areas of where they like to sell the market. You can see here, even right up in this area. And we're approaching that now. So can it go higher? Absolutely. We can get into the 80s or 90s. But now we start to watch and be careful and use caution when we're looking for trades. Now, the reason why we like to use these videos is that we say, okay, we're right now at an overbought state. We're coming into resistance. You can use that to your advantage when you're day trading. You can say to yourself, okay, well, we have the trend is now down, and we have an overall trend now that's overbought and overextended. Maybe we can get a bigger push to the downside for that trading day, so that you would look to sell any rallies with conviction, because you already have your idea off the daily chart, if you know what I mean. Okay, so now stocks above the 50-day moving average. The McClellan oscillator, very reliable at 94, guys. This is very big. Now, we're not outside the Bollinger Band, but this is a very big reading here, 94. And every time you get to these areas, and you can see back up in this area here, we look to get the markets to roll over. Now, again, we could move even higher, but this is a big reading, 94, in a relatively short time. The markets have moved up. So I'm looking for a stall, a pause, and even if we get a little bit of a pullback, and then look to move higher again, or obviously when that does occur, we'll look to see if the markets either stabilize or look to move lower and or high, depending on what the markets are doing at that given time, right? So we want to identify that the patterns are right now, yes, the short-term time frames, daily charts are looking good to the upside. Weeklies are poor, still looking like we're moving lower, and the weekly usually dominates, obviously, the shorter-term time frame, and we have our indicators that are now getting into overbought territory and are overbought. So we have to use caution now going into the next couple of days of trade. We do have non-farm payrolls that come out tomorrow, which is a big number, and usually will dictate what direction the trend will be for that month. Okay, so we need to pay attention to that. That comes out tomorrow, 8:30 a.m. Eastern Time. I want to show you gold real quick. Gold is still relatively well bid up. That's still telling me that there is still a fear trade going on, although we do have a lot of the volatility has subsided, such as the VIX and the average true range. But you still have to look at where a lot of these fear trades, and you can see there's lower lows and lower highs. We alleviated that bearish symmetry, and now we're actually headed up higher. Again, this 200 should cap it. I don't believe we should go above that unless we have something really serious happen in the markets. Okay, but get an idea. This is the weekly chart of GLD, and you could see here clearly that it was still well bid up here. We're going into like 6 weeks now of this breakout off this downtrend line. So again, not still telling me that all is well. Let's dive into the pool together, you know. XLF, I wanted to show you that because the banks finally participated the last couple of days, extended its gains from Tuesday. Really nice looking chart. And this is what you want to see. You want to see what the banks are doing. You want to see what the financials are doing. And you want to see what technology is doing. Now, mind you, this is the XLK ETF. We did eke out a gain. However, NASDAQ was down all day yesterday. If you trade the NQ or if you trade the Qs, as you know, they were selling into NASDAQ all day. NASDAQ ended up closing down on the day, but it was just a poor indice to trade yesterday. And I wanted to make that note because I'm not sure if it's just because there was a couple of stocks in there that was heavily weighted that was holding down the Nasdaq. But when I looked at the Googles and the Facebooks, and the Facebook was down a little bit, and the Amazons, but nothing relative of significance to the downside. So just real interesting to see what's going to happen the next couple of days in the Nasdaq. Okay, now let's go into the indexes, guys. Spiders, you can see here we're approaching some key areas of resistance. And remember what I said, lots of resistance because there's lots of buyers that are trapped up in here. Now, do they buy up above here at 201 with this extension, or do they start to sell? And that's something that we're going to be watching for and monitoring. We're coming into the 2000 to 2020 in the ES, and to me, it's going to be something that we're going to need to really pay attention to, okay? But right now, I think we're a little bit extended. You can see RSI isn't quite overbought yet, obviously. And we have MACD that crossed over nicely. So we're still trending higher. I still think that there's a little bit more room to push to the upside. But watch when you get into that 2000 area in the S&P, okay? Next is going to be the 60-minute. I want to just show you that we still have some gap areas that need to be filled. Down here, the two bigger significant ones. And we have one right up in this area here, which we did fill that gap, as you can see. So we're starting to trend higher. But I want to show you that this is the bigger picture, and you can see that we have this thin zone. So we can, just like we used it going down, we could actually get right up into this area. But look where we are here. This is that 200 area in the S&P, the spiders, and 2000 in the ES, where we come into some resistance. Okay, so here's that little thin zone right up in here. Let me just get rid of that for a second. Okay, here's that little thin zone right up into here. And then this is where we're matching now. And you can see here, guys, clearly you can see we have a little bearish rising wedge into that 60-minute chart. So you just got to use a little caution, and especially if you're a longer-term swing trader or investor where you want to start adding to the orders. I still believe we're going to see one more downturn, and then I think March, April will put some sort of a local low in, a short-term tradable bottom, and then we'll go from there going into the spring months. Diamonds, you can see here clearly same thing underneath the 200, and we're approaching this area here of significance, big area of resistance, and this is what we're going to watch for if we're going to break out or if we're going to fall below that 200 area. Okay, this is a laggard, but still need to pay attention to it. Transport's our leader, doing well, finally now starting to lead the way higher, but I see low volume, I see little small candles. I don't see anything, any kind of real strength in this index other than we've been oversold since 2014, and now we're starting to rally a little bit into the 200. Okay, and we're coming into a heavy area of resistance as well. But our leader is leading. Our IWM finally taking another leadership role as our secondary leader. You can see here broke above. You can mark these support areas down off the daily. And again, the thin zone happens, and here we are right up into this area. So that 200 is going to be a really big, important role. And you can see here where this coincides nicely with this area. This horizontal area of resistance coincides nicely with the 200. So again, secondary leader leading, a little bit extended, and I like the volume that's coming up into this thing. So this is a good sign for the bulls. But let's just, again, keep an eye on things. We still have a little bit of a mixed picture here, okay? Qs, you could see here as well under the 200, but really didn't do anything yesterday. Very rarely. We were down all day. We barely just eked out a gain going into the end of the day. So just, again, you're trading the Qs today, technology, use a little bit of caution today. Hope it helps everybody. Have a great day, and we'll talk to you tomorrow. Take care.